Hey everyone, in this video I wanted to compare two dividend stocks and answer which one is the better stock to buy for passive income investors. The two dividend stocks I'm going to consider are Advanced Auto Parts and Dollar General. So I'm going to look at a few financial metrics and then towards the end of the video answer the question which one is the better dividend stock to buy. Let's get right into it. Starting with the dividend yield, looking at this, Advanced Auto Parts has a robust 6.42% dividend yield compared to just a 1.35% dividend yield for Dollar General stock. Now, remember, when you're investing in dividend stocks, it's not just the dividend yield that you earn. You also earn or lose the change in the stock price. So if the stock price falls, and the dividend yield is not enough to cover that, you could end up losing money on the stock. So it's important to look at the other financial metrics that could determine if the stock price is likely to rise or fall. And that's what I'll do in the next few metrics here, starting with revenue. And looking at revenue, it looks like Dollar General does a much better job at increasing revenue, growing it from around 18 billion in 2014 all the way to 38.44 billion. So very nice revenue growth from Dollar General compared to Advanced Auto Parts, who has only experienced modest dividend growth over the last decade. Moving on to its cash flow from operations to sales over the trailing 12 months. Now, this trend is troubling for both of these dividend stocks. They're going downward fast, but Dollar General is better at 4.49% compared to Advanced Auto Parts at 3.56%. Each of these two were on a nice upward trend. However, the economic reopening does not look like it was kind to either one of these stocks, and that's understandable. During the early stages of the pandemic, these two companies were allowed to stay open, deemed essential retailers, when others were forced to shut down, so consumers had more money in their pockets, fewer places to shop. These companies were prime beneficiaries, and now that trend is reversing and it's hurting these two dividend stocks. And the story looks the same for their operating profit margins over the trailing 12 months. Although from this metric, it looks like Advanced Auto Parts was on a steady decline even before the economic reopening. You could see their trend. They went from an operating profit margin around 12% all the way down to just 5.37%. Whereas Dollar General, yes, they were declining, but not as steeply as Advanced Auto Parts, and their operating profit margin is a more respectable 8.65%. And finally, I wanted to look at their valuations, and I chose to use the forward price to earnings ratio. And according to this metric, Dollar General stock is more expensive at a forward PE of 15.29 compared to Advanced Auto Parts with the forward PE of 9.945. Although given the situation, given the better revenue growth from Dollar General and better performance across the board from Dollar General, if I was looking for one of these two dividend stocks to buy, I would choose Dollar General as the better dividend stock to buy right now. All right, but that's all I've got for this brief video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.